What's good, guys? This is a long awaited video. A lot of people in my Discord have been asking for this video. So this video is going to be my complete model, how I trade, what my confluences are, everything that goes into my model will be explained in this video. So if you enjoy, please stick to the end of the video, because I'm going to be dropping my entire model that has made me consistent five figures in the past 2 months. So, for those who don't know, I trade the ICT 2022 model. So, for those who don't know, pretty much based on the whole thing, it's a liquidity sweep. A market structure shift, also known as like a break of structure if you watch the TGR bootcamp. And then after that, I want to see a fair value gap, and then I want to see it trade into that fair value gap, and then I want to see it run towards opposing liquidity. Okay, that's pretty much the model, just on a very broad general basis. But let's dig a little bit deeper into what I actually personally trade. So, for example, I just drew out a little line chart here, right? So we have relative equal highs here. So this is our, I'll just type it. So this is our relative equal highs, buy side liquidity. Okay, this is what I would do when I get on the charts in the morning. So pretend this is like 9:15 a.m. I would be getting on the charts, and this is the chart I would see. First thing I'm doing is I'm going on the 4 hour, the 1 hour, and I'm looking, okay, what is price action doing? Are we bullish? Are we in, like, what is overall market structure doing? So for this example's sake, let's just say the 4 hour chart looks very bullish. There's notable highs above us. We're respecting bullish PD rays on the higher time frame. Okay. Then you keep scaling down. You see 1 hour, it looks pretty bullish. We respected a bullish 1 hour gap. 15-minute, you can see that we swept out sell side liquidity, and now we're making legs higher. Then on the 1 minute, 5 minute, you're going to wait for market open, and you're going to ideally want to see sell side being taken. And that's what the ICT 2022 model is. You want to see sell side get taken pretty much right off the open. So I would mark out this as sell side liquidity. And normally, the sell side liquidity and the buy side liquidity that I mark out, I see on the 15-minute, 1 hour time frames, even 4 hours sometimes. So they're very major liquidity points, very external highs and lows in the market. And this could be a session high or low. Like, for example, this could be, London lows, right? This could be London low. This could be, data lows at 8:30. Whatever the case is, it's a very notable low. And these highs could be, London highs. Asia highs, right? Just high time frame relative equal highs. So it could just be any high session highs, data highs. And a big thing I learned watching ICT is relative equal levels want to be made jagged and they want to be taken out. So this would be a good strong draw on liquidity that I kind of know will be taken out. So once I get my bias down, I know what I want to see in the market. So for example, I want to see these highs get taken out. I wait for market open, and I sit on my hands. I wait for news, I wait for everything. I just sit and wait. I do not even go on to the 1 minute chart until I see this sell side get taken, because in the IC 2022 model, what is the first step? A liquidity sweep. So what I like to do is market opens right at 9:30. We see it start chopping. 9:35, we dump into the sell side. Okay, so that's step one. So once that happens, I'm like, okay, we just swept out sell side liquidity. I want to see it, get some, buy orders out of it. I want to see us start moving higher and ultimately create a market structure shift. So it sweeps out the sell side liquidity. We just start chopping a little bit. We make a little bit of highs here, and then 9:50 macro comes around. All right, that's the time I like to trade, because I was taught when I watched ICT's 2022 mentorship, the macro at 9:50 to 10:10 is a high probable window where price will want to start spooling towards liquidity, hence the buy side liquidity up here. So I wait for liquidity to be swept, then I wait for a market structure shift, and the market structure shift I wait for is a market structure shift with displacement. And what I mean by that is I don't want it to be some little rinky dink like this, like slowly trailing up. I want to see like two candles like just completely break through a high. So on an actual chart, we can kind of find like an example. So, for example, this candle right here at 1111 is big displacement to the downside, right? And these little candles aren't displacement, right? These little, I want big full candles to be, um, moving past that low, that like second high. So I want to see a big move up right after it sweeps liquidity, like boom, like that. You see how it's just sharp up. It's not really like slowly trickling up. It's a big move up. So that's what I want to see, making a market structure shift here. So as you can see, that is step 2 pretty much down. And again, my model is a little bit different than just the blatant 2022 model. And then with this market structure shift, I want to see a fair value gap be created inside of this market structure shift. And I also, it's extra confluence if we see an inversion fair value gap get created too inside of it. So if there's an inversion, but there has to be at least one of these two, right? There could also be a breaker block if it makes a lower low. It could be an order block if there's a down close candle. So there's a lot more confluence that could be that reverses here. Then the next thing I want to see after we break structure to the upside for more confluence and for a better entry is I want to draw a fib from where it makes the market structure shift to where it starts trading back into the fair value gap. And I want to see it trade into equilibrium, trade into a discount, and then trade higher. So this is actually a really good example that I just drew out. We have a bullish fair value gap here, right? And a lot of people would just take the entry straight off the fair value gap, but you could actually get a better entry using the equilibrium here. If you draw the fib from, where it starts the market structure shift to where it, made its peak and starts trading down, where is it? And where it starts trading down, you could see 50% is right here, and it lines exactly where that inversion fair value gap lines up with the fair value gap. And that's exactly where I'd put my entry, and you can get a way better entry. So you wait for the market to trade back into that 50%. You could wait for a little bit of rejection, but if it happens, if it trades into that fair value gap right after it makes it, I'm entering long right there. Buy position straight at 50% right here. Take profit at the relative equal highs. Stop loss below the low. Really good risk reward here on this trade that I would have taken. And, stop below the low. And I just let it ride. It starts trading higher, right? Once it makes a new high past like a swing high, I would put my stop break even. So for this example here, I would probably put my stop break even right when we pass this high, or once it broke past one of these highs, maybe these relative equal highs, because it could have reversed here. But I just let my trade ride, and it goes straight to take profit. And this is a example of my model to the exact T. And again, I'm taking this trade from the window of 950 to 1010. Okay. That's when I want to take my trades, okay? Around the 950 to 1010 macro, that's when I find it most probable for the setup. That's when I figured out with enough journaling, enough backtesting, that's when I like to take my trades. So the earliest I'll take my trade is around 940, like 945, around there. But I'm really trying to wait for 950. So pretty much my entire model in one is a liquidity sweep, a market structure shift with displacement. It has to have displacement because that shows it has an urgency to get to the opposing liquidity. Okay, then I want to see it retrace into premium or discount, trade into a fair value gap or IFVG, and then it has to be the right time of day, meaning it has to be the 950 to 1010 macro or around it. Not like, I'm not taking this setup at 9:30 in the morning because the trade hasn't even presented itself. So it has to be the right time of day, meaning, the macro. And then there has to be opposing liquidity, right? You can't just take this trade if there's no liquidity, if there's no strong liquidity above it, because there's no reason for the market to get to that spot. So this is pretty much my model. If these things don't happen, I will normally not take the trade, or I'll be a little bit risk off in the market because it's not an A+ setup. But I hope this helped and answered a lot of people's questions on what my exact model is, because this is literally it to the T. And I think it was a pretty good example I just showed here, and it really played out very well. With this fair value gaps overlapping each other. But that's my model. I hope it helped you guys, and peace out.